For TRICHOMES.com, I'm Jesse Batend, and this is The High Ground. On this show, we feature leaders of the cannabis industry. We talk to everyone from farmers to CEOs and public officials, anyone making an impact on the cannabis community and beyond. You may have heard that one of the biggest challenges for the cannabis industry is that credit card companies and the overwhelming majority of banks refuse to work with cannabis companies. That's how we ended up with the SAFE Act, or the Secure and Fair Enforcement Act of 2019, which seeks to give banks coverage to process cannabis-related payments, as well as offer them traditional banking options. But according to my next guests, even if it passes, which at this point is honestly a toss-up, the SAFE Act is very likely going to fall short of achieving those goals. Here to explain why, Kirsten Trusko is CEO of Emerging Markets Coalition, which specializes in building financial service solutions for high-risk markets. Zane Gilmer is a partner at Stinson LLC. He works with banks interested in entering the cannabis space. Zane, Kirsten, thank you so much for joining me.
Absolutely. Thanks for having us.
So I just wanted to start by asking you, Zane, what exactly is the SAFE Act and what does it provide in terms of protections for banks?
At a high level, the intent of the bill is to really open up access to banking for the marijuana industry by effectively protecting banks from a regulatory perspective, like getting scrutinized by federal bank regulators for providing bank accounts to a dispensary or a grow operation. And because of the Controlled Substances Act prohibiting the manufacture, distribution, or sale of marijuana, that really keeps a lot of banks out of the space, and they don't want the regulatory scrutiny or maybe even the criminal exposure for providing that. And so what the SAFE Act is designed to do is to sort of take some of that off the table. In theory, that would then open up these banks to providing services.
And what are some of the ways that this act would be able to provide protection in a situation where cannabis remains federally illegal?
So the main things that it does is providing a safe harbor for depository institutions. So the safe harbor does a few things. It prohibits federal bank regulators from terminating or limiting the deposit insurance that is available to those institutions solely because those institutions chose to provide financial services to cannabis-related businesses or service providers. It also prohibits the regulators from basically penalizing or otherwise prohibiting those deposit institutions from providing services to cannabis businesses. And they also sort of similarly can't sort of recommend that they don't provide services. And so it's really kind of a make sure that the regulators don't do anything negative against the depository institution just because they want to provide services or that they are providing services. Now, a key piece here or a caveat is that the Act repeatedly refers to cannabis businesses as cannabis-related legitimate businesses or service providers. And the legitimate piece is key because it's not just any cannabis business. It's those businesses that are in compliance with their respective state laws on cannabis-related activity. And so there's still a bit of work that the depository institution has to do to ensure that they're dealing with quote-unquote legitimate business rather than just an illegitimate cannabis business.
And so because we have this situation where there are multiple states, each of which has their own slight variation on a program, Kirsten, that would mean that these institutions, just because they have some sort of protection, would still need to do a lot of work to make sure that they're in compliance with state laws as well. Is that correct?
It is. And Jesse, that's one of the things that's exciting and has advanced over the last, even year or so. When banks first looked at entering the market, they had to figure this out on their own and hire their own compliance people and try to find their own experts. and it was very costly. And some banks still do that, but now there's platforms out there that are designed on behalf of the banks to know in depth all of these changing rules and regulations at the state level as well as the federal level. So the banks can enter using one of these platforms and not have to have that resident knowledge or have to hire all that headcount. In my opinion and experience, even if or when everything is fully legal at a federal level, this would still fall, cannabis would still fall from a banking perspective into a high-risk market. So if you looked at alcohol or gaming or other markets that are high risk, financial institutions and payments companies who would tend towards higher risk industries would be more open to this. Those who are very, very conservative would still look at it as a high risk market.
Zane, you talked a little bit about some of the risks or the protections that they would want in order to go forward. Beyond potential criminal liability, is there anything else stopping them from being more aggressively involved?
Yeah, I mean, from a regulatory perspective, which is really what the SAFE Act is designed to remedy, in my view, that's the bigger obstacle than the criminal component. The criminal component is obviously very real. It's a game changer if it ever came to fruition. But in terms of whether that actually occurs or not, we just haven't seen it. And so the risk there is fairly slim. But that slim chance that it comes to fruition is a big deal, right? But on the regulatory side, that's the more immediate issue, because federal bank regulators are in these banks all the time, doing examinations and of their Bank Secrecy Act and anti-money laundering policies. They're just sort of general safety and soundness reviews, and so those are the folks that the banks are really concerned about in appeasing them and making sure that they have the proper structures in place, which to Kirsten's point, I mean, it's expensive. And while there are a number of outside vendors that provide varying degrees of this support, the banks still have to pay for it, and you can't completely outsource all of these compliance obligations to a third party. And so there's a lot of cost to be borne. And with that, if there's a misstep, these regulators have the ability to enter, enforcement actions or decrees against the financial institutions, and that could affect their broader business. And so that's the bigger concern, and making sure that those I's get dotted and T's get crossed.
And Kirsten, you've talked before about some of the risks potentially involved here. If a institution was caught processing fraudulent payments, they might, for instance, lose the ability to ever process payments. What are banks worried about?
Well, I think part of it is optics. And this is where, as more and more articles and things come out about the benefits of cannabis and responsible business owners and the benefits of the tax money come to the community, that's really key, because a lot of the banks and financial institutions that are in this are regional and community and credit unions. They are part of the community. They are serving the community. And that's how a lot of them have explained to us how they've gotten in, where a longtime business client in some other business ended up leasing to a dispensary or something. And so these are long-time relationships. So that's part of the challenge. But just to highlight a positive, and as we talk to the cannabis-related businesses and to the financial institutions, these are really what they're sharing. These are very loyal businesses. In banking, we call them sticky. So when there's a good, strong relationship formed, like you were talking about, Jesse, whether it's payments or lending or core banking, the cannabis-related businesses really value a good financial institution and a good relationship, and they stay, which is really helpful for the bank. And these are higher risk and higher reward. So the revenues related to these are higher than, say, a coffee shop would be. So there are some real positives to this. And that is what's one of the reasons that the financial institutions and the payments companies are really interested in the market.
Zane, you have actually worked with banks to set them up to be able to process cannabis payments. For people that are unaware of kind of how that's possible, what does that look like, and what kind of banks have some skin in the game?
Yeah, so there are a few iterations that exist. The most common bank dispensary relationship is just one of a depository relationship. So just like, you and I may have a savings account at a bank, and we take our money and we go and put it in our deposit account at the bank. That's the most common relationship. And then the complicating factor with that is, unlike you and I taking our money down there, where we may be taking a few $100 down there at a time, they're taking, thousands and thousands and thousands of dollars at any given time, all in cash, to the bank. And so the challenge there is how you actually get the money from the dispensary to the bank, and credit it in their deposit account. And so there are armored car services that will oftentimes pick up the funds directly from the dispensary and then take it either directly to the Federal Reserve or to some offsite. And so that's the more typical approach. The other piece is the payment side of things, where you have non-cash transactions. As Kirsten alluded to, this is bigger than banks. There are payment processors involved in credit card companies. The credit card companies' own policies prohibit marijuana transactions from being processed through their cards. So Visa and MasterCard have policies against that. So what has entered the space really is kind of what's called a closed loop transaction, which looks more like a debit transaction, where money is effectively being pulled out of your account, your deposit account, and being paid or credited into the dispensary's account through the use of technology, fintech, really. And there are a whole bunch of models out there that allow this to happen, but it's done that way, and it's more of a ledger accounting transaction rather than a credit transaction that goes through a credit card company. And so these fintech companies have popped up, and they basically allow you to load money like Starbucks or something else, where you have like a prepaid sort of system. And then as you go and make a transaction, it debits it off of your account with the dispensary and moves that money into the dispensary's funds. And so the iterations of that are many, but those are kind of the main transactions that are out there.
So this conversation really was prompted, Kirsten, by a conversation we had off mic when we were talking about the SAFE Act, and you said, even if it passes, it's not going to fix all the problems. In what ways does the SAFE Act not provide enough coverage?
So as long as this is still federally illegal, then federal banks and payment companies are still going to be challenged. Just their operating rules that say if something is an illegal substance, then you cannot transact. And that blocks out the major card networks. It blocks out the national banks. SAFE doesn't solve all that.
Yeah, and on that note, I mean, Kirsten, you mentioned earlier one of the things that can't be really addressed in any of this, which is reputational issues. So if the bank or credit union or other financial service provider doesn't want to be involved in this because they're afraid that it may affect their other non-cannabis relationship business lines, the Safe Banking Act doesn't solve that, because marijuana still remains as a controlled substance under this regime. It just provides some sort of regulatory protection. But more to the question, Jesse, and to what Kirsten was just mentioning, even if it passes, the banks still have to do work to figure out, as I mentioned earlier, whether these are legitimate marijuana businesses. And that takes a lot of work because every jurisdiction has their own licensing structures, their own regulations. And so to really know whether you're in compliance with the respective state's marijuana laws and therefore constitute a legitimate cannabis business, somebody, mainly the bank, has to go in and figure that all out by doing all of their due diligence up front and then ongoing monitoring to make sure that you stay in compliance and all of those proceeds still fall under the SAFE Act's safe harbor. Because if they don't, then you're basically operating under the same regime that we're operating under now, which is no protection for any of these transactions. And so I don't see that that this is going to solve everything for all of these institutions. I do think that you'll see more institutions enter the space just because it gives them a little bit more regulatory cover. But I don't think you'll see, every one of your local community banks and credit unions, or certainly the nationals, getting involved just because the SAFE Act passes.
One of the other issues with lack of access to banking is not just payments themselves, but access to loans or capital when starting a business. And that's particularly relevant when you're talking about social equity applicants, which happen to be the same groups that have historically had lack of access to banking or trouble getting loans. There's this whole other issue where even if cannabis was legal, it doesn't necessarily mean that everybody would have access to capital or the ability to start their business.
Yeah, lack of or insufficient access to capital is, I don't know if it's bigger than, but certainly as big of a problem as lack of access to depository services for different reasons, some of which you described in terms of social equity issues, being able to actually apply for these licenses in the first place, to be able to have the necessary capital to get the licensing regulatory regimes to accept you as an applicant, or even being able to invest in, buy, or expand your business. And so that those are certainly issues that aren't going to change based on the SAFE Act. As I tell clients all the time, it's one thing if you provide depository services and you've done the risk analysis to decide whether or not you want to provide depository services because you can make a little bit more money, and the risks, you've figured out that you can do this on a cost-effective basis, and your risk really isn't enough to warrant you staying out of it. That's a whole different issue than if you decide to take the bank's money, which is really other customers' money, and loan it out to a cannabis business, because the risk profile is different. If things change and regulators come in and tell you to stop participating in this industry, or worse, the Department of Justice or other law enforcement agencies come in and start wanting to try to enforce the Controlled Substances Act against you, it's a lot harder to exit that line of business if you have loans out, because you can call those loans all day long, but you're at the beck and call of the cannabis company to return that money to you so you can fully exit that line. It's a different issue if you're just trying to give people, their own money back out of their deposit account and exit the industry. It's just not the same risk profile. But, to your original point, it is a bit of an issue, and I find it really perfunctory, frankly, that in many states that where marijuana is legal, both on the medical and recreational side, that many of those states during the pandemic designated these businesses as essential businesses, just like a whole bunch of others, so that they could continue to operate when others had to shut down. Yet they didn't have the same access to federal funding that other businesses did, whether they were essential or not. And so we're creating this very sort of odd structure here where we're basically using the Controlled Substances Act as a shield when we want to, and we want to act as though these businesses don't operate and people don't use them and they're not otherwise legitimate. Yet, on the other hand, we tell them that they can stay open because they're essential. It doesn't make much sense to me.
Kirsten, the situation is that when someone applies for a loan with a bank, they could be denied, and that bank doesn't have any responsibility to necessarily explain why they were denied. Is that also right?
No, partially right.
Okay.
There will be something that will say insufficient assets, or there'll always be some reason. But it's not always the level of detail, like we discussed earlier, of what that business owner needs to know. And one of the things that comes up a lot in cannabis financial services that we don't see as much in other verticals is the whole social equity topic. And I think when we talked earlier, it had been about people that are seeking to open dispensaries or grow houses, and they don't have their own assets to go ahead and do that. And they might not have access to family and friends who have a lot of assets that they could lend to them. So then you go to the bank, and the bank will say, well, you have insufficient assets, or you have insufficient business experience, or insufficient loan experience in this industry. So there's all kinds of things that make for kind of a circular argument that can be really frustrating, as even as some of these states seek to kind of equalize under a social equity program for the licensing, but then the licensees still have to be able to borrow the money to build the facilities and build out the business.
Recently, there was a report from FinCEN that showed that as of this year in 2020, there were less banks that reported processing cannabis payments. It's down from, I think, 715 they reported in 2019 to 695 in 2020. Does that say anything? It's not a massive difference in numbers, but when you see something like that, does that spark anything in either of you?
No, because those numbers initially are flawed. So when you start comparing them to themselves, they don't make a lot of sense. So the way FinCEN reports the number of financial institutions involved is based on financial institutions filing SARs, suspicious activity reports, as you indicated. And the problem with that is there's a lot of inconsistency with the way financial institutions file those SARs. And so they file them for a lot of different reasons. And FinCEN doesn't really distinguish or vet whether or not the underlying SAR was properly filed. So for instance, SARs are typically only supposed to be filed for direct, like licensed grow or dispensary operations, sort of plant touching, selling entities, not necessarily indirect relationships like a real estate sort of deal. Yet some institutions, either out of confusion or an abundance of caution, will file marijuana related SARs on non-plant touching ancillary businesses that are way down the supply chain or touching chain. And FinCEN doesn't distinguish between that. If it gets filed, and it gets counted. And so, number one, there's an issue there. So we don't really know whether the underlying data, even from 2019, is accurate. But the other issue between year to year, and FinCEN, I think, notes this in their own reporting. Some of the downturn could result from just banks not reporting as often as they were in 2019, in part because of the pandemic. It threw a lot of administrative and regulatory wrinkles into bank operations, and so some banks aren't filing them as regularly as they were. So when you file a SAR, typically you can do what's called a continuing SAR and file every either 60, 90, in some cases 120 days after you filed the initial one. And maybe they were filing every 30 days before, and they've now extended that out to 60 or 90 days because of the pandemic. And depending on when FinCEN then reports, you have a lag in reporting.
Yeah, adding one more piece to that too is with the banks that file, it doesn't mean that they are actively and proactively banking cannabis. The banks are filing if they have found that they've had a cannabis-related transaction. So we've seen articles that say, hey, we should have plenty of banks because there's 700-ish who are actively banking cannabis. And that's just not the case. What we've seen are estimates somewhere around 100, maybe a little higher than that. So those others that are reporting their suspicious activity reports into FinCEN aren't necessarily actively going out and trying to serve the cannabis industry. So it still is a dramatically underserved market in most states.
That's interesting. I also wanted to kind of ask, I suppose this one's a little bit more of an opinion, but I've heard of people who have been denied for the opportunity to have banking, and they're not at all plant touching. Do you have a sense that banks are being overly cautious in these situations? What's your sense of that?
It's all over the board. So one of the things I do with bank clients out of the gate is to sort of ask that question, because these things aren't all the same. So, I try to go through the risk profile of each of these supply chain participants, and whether it be plant touching or second tier, third tier, or somewhere down the chain, then everything sort of shifts in terms of risk the further away from you the plant you get. I sort of use the analogy of the target and the bullseye, and the bullseye being the highest risk, and usually it's the marijuana growers, touchers, and sellers that typically aren't in compliance or have loose compliance with state law. Those are the highest risk, right? And they, and everybody's aiming for the bullseye. So if you're dealing with them, you might get hit by the dart. But the further away you move, by analogy, you get further out to the perimeter of the dartboard, and you still may get hit because there's risk. People are still aiming in your direction, but you're less likely to get hit because you're not the focus of the target. And so there's risk for people in the supply chain just because they are doing business with marijuana related businesses. But the further you get out, the more attenuated it becomes and less risky for the financial institutions. So yes, we do see banks not willing to take on, retail companies that are selling CBD, or the construction company that does business with grow operations or whatever. But usually you're less likely to have a problem if you're a construction company and you do a couple of grow build outs a year, where as opposed to if your whole construction business is designed for and involved in growing, building out grow operations, that's going to be a different analysis for the bank.
This was one of the drivers for co-founding Emerging Markets Coalition and choosing to serve the cannabis-related industry first, is we heard all these horror stories of CPAs and accountants and lawyers and all kinds of folks who were seeking to serve the industry and were having their bank accounts shut down summarily, their mortgages called. It was crazy, and they weren't plant touching to the question that you're asking. So this is part of the idea of bringing together, which is what EMC does, bringing together the financial services industry and the cannabis industry so that we can proactively go to media, go to federal and state government, go to lawmakers and law enforcement, and educate on these are very legitimate, very professional businesses. And we pay our taxes and we do our proper audits, and to replace some of the misinformation that's out there, because some of the banking challenges you just talked about are based on misinformation and misperception, where the bankers or their board have been told, hey, stay away from that stuff. But they don't understand there's a huge professional business sector here that they're missing.
I want to ask you about another aspect of your previous career, Kirsten. We saw last month the U.S. Department of State released a report that showed 2 instances, at least, that they documented of black market cannabis being involved with human trafficking. And you have some previous experience working to fight human trafficking. How do financial services play into preventing human trafficking, and why would having financial documents make it more possible for law enforcement to prevent these kinds of things?
Well, thank you for asking, Jesse. And yet it was actually the pro bono work I've done in anti-human trafficking for years that got me to help co-found Emerging Markets Coalition. Last year, I'd gotten a call from some law enforcement friends who call when they have an anti-human trafficking case to say, hey, help us follow the money. Bring in your banker friends, your payment friends. and let's work together, because we've had some really good success. If you can follow the money trail, then you can often catch the criminals much higher up the food chain. And so this case came in and it was all cash. I said, guys, there's no money trail. Like, there's no electronic money trail here. And it turned out that particular case, it was cannabis cash. And any industry that's high cash based is going to attract nefarious characters and illegal activity. So it's not just this industry, it's any that's heavy cash. And one of the things we've been pushing as EMC is to normalize financial services and then make sure that the financial transactions are electronic. Once they're electronic, they're transparent, they're traceable. You can fairly tax them. But that law enforcement, to be able to follow the money trail, is critical to catching criminals. And by electronifying these cannabis-related transactions and making the financial transactions traceable, it's huge in a battle against human trafficking or money laundering or virtually any crime.
So what do people like you need to make that case to the media, to society, to voters? How do you make this change?
So it's a couple of things. One, in this industry, like other emerging industries, there's a flood of information and a desert of facts. So you see all kinds of articles and things out that either aren't entirely accurate by accident, or somebody is doing this on purpose to try to change the story. So part of it is working together with researchers and industry and government to capture what's true. What are the true dollars transacting through the system? What are the tax potentials? What are the payroll potentials? What are the benefits and challenges that might come? The other is very proactively bringing the financial services industry and cannabis industry together, and together going to Capitol Hill, to the state, to law enforcement, to media, to consumer advocacy groups, and sharing the facts and making sure that when people have perceptions, they are based on fact. And in a previous industry, my co-founder and I were able to go to do that. And now that industry is normalized. Like, nobody even thinks of it as something exceptional. And that's what we're hoping to do here, is to shine a bright light on the facts, good and bad, and get fair treatment and normalize financial services.
Yeah, I mean, I think it's, to Kirsten's point, I think it's education. And let's not forget that the U.S. has spent a ton of money on the war on drugs over the last few decades. And, without picking a side on whether that was proper or not, or whichever view you have, that's the fact. And so there are a whole bunch of both, state and federal legislatures who, some of which have lived through that, who voted on legislation that funded those efforts. And there's a perspective that they hold that is negative to the industry, and rightly or wrongly, those things trickle down to media and to everybody else. And meanwhile, we have an industry that's sort of burgeoning, developing in new states around the world, really. And there's a huge inconsistency there. And it's not the same industry that started in 2014 in Colorado, for instance, with recreational. It has become very sophisticated and well developed. And, there are a lot of stories to be told there, and frankly, need to be told. And so I think it's just a matter of education and being willing to learn and listen and maybe change your viewpoints from, what you held 2 decades ago.
Zane Gilmer is a partner with Stinson LLC. Kirsten Trusko is the CEO of Emerging Markets Coalition. I want to thank you guys both so much for taking the time to talk to me.
Thank you.
Thank you.
You can find more cannabis industry reporting at TRICHOMES.com, as well as more great shows like this one. If you're a member of the cannabis community and you have a story you want to share with us, reach out. You can reach the show at highground@TRICHOMES.com. Please take a second to subscribe to the podcast and write a review. It really helps others find the show. You can also join the discussion with industry insiders and get your voice heard by joining the community at TRICHOMES.com and following us on all social media. The show is produced by David Fortin. I'm Jesse Batend, and thank you for listening.